Hey, Landy, how are you today, man?
I'm doing well, and yourself?
I am doing excellent. Feeling good about where things are in the ecosystem. I we're only less than a week away from finally having a crypto-friendly administration in the U.S. Knock
Oh
on.
yeah.
And yeah, I'm feeling good. I'm feeling good where deorganized headed. I like where the Bitcoin place is going. I'm confident that Stacks is going to move forward in a productive way. So I'm feeling good, man. How are you?
I'm doing well. It's been quite a volatile prior week, so I was having a lot of fun trading. And then, of course, we saw Bitcoin and many other coins kind of try to find at least some shorter term time frame lows. So I was able to trade some nice upside moves. So yeah, I'm having a good time. Market volatility is what I like to trade, and we've seen a lot of me talking about that on this particular show. And I think it's about time that we take a look at the Stacks token, because Stacks was very highly volatile to the upside for a while, and then it had a very large pullback. And I think that we need to maybe get into exercising some of our analysis that we've learned over the course of these live streams, and apply that to, I think, a token that many in the audience are familiar with. What do you say?
I agree. I've actually been. I was super excited when you told me what you wanted to have the title of this episode as. So, yeah, man, I'm all about it.
Awesome. Well, I have I've shared now with you a Stacks USD pair, and I believe this is the crypto.com pair. There was some exchanges that got the listing earlier than others, so I wanted a bit more history than something like Coinbase, although I like to use Coinbase as a reference as it's one of the biggest spot exchanges in terms of volume. And we're looking at Stacks from about April of 2022 and until today. And this is a weekly chart. And I think this is a good place for anyone who wants to start their analysis to start with, and that's some longer term time frames. A weekly is a good starting place to kind of get a feel for some of the more near term price action, and then your monthly is where you want to go for the longer term. Now, if it's a coin like Bitcoin or Ethereum that has a very long history, a very long charted history, has been on centralized exchanges with its spot pairs, then I would prefer to start with the monthly. And we can start with the monthly here on Stacks, and we can just look at the trend. I think that the trend is fairly clear. Would you say that this is an uptrend or a downtrend?
Well, it looks like an uptrend to me. I see higher low after higher low and higher high
Yep.
after
I mean,
higher high. So we're due to make another higher high to,
well,
to set
in
the
theory,
to set
yeah,
up higher low, right?
yeah, yeah. I mean, one of the things that we've seen now in Stacks is that we have this nice higher low structure going on. We have this nice uptrending structure, and of course, our very first episode was all about trend. And then this is a longer term time frame, so this is our macro time frame for Stacks in this case. If we go too much higher, it becomes a little less clear. We have higher low structure, higher high, and higher low structure here, right? But in this case, we haven't seen like a 2 month time frame higher low just yet, and it's probably going to be better for us to take a look at the monthly in this case to see what the potential could be for a longer term time frame like the 2 month, and then we can kind of reference the weekly. So we know that this is an uptrending structure, And the easiest thing to do is to kind of track the current uptrend in terms of support and resistance to kind of define some macro time frame zones. And one of the easiest ways to do that is obviously to use the horizontal line tool here on TradingView. And in this case, because we don't have history for the prior candle here prior to April in terms of this charted history, we're just going to use the high here on the monthly from March of 2023. And we can create a zone out of this. I'm going to fill it in with the rectangle tool here. And for those that might be wondering how I'm getting the color all the way across the screen, I did get some questions after our live stream the last time. All I did was I have extend right and extend left, and then I have the background fill, and I just set it to yellow. Now we have
I've been using that, by the way.
Okay, awesome. Good, because this helps us just visualize those zones of interest and not just have random lines that we're just like, wait, what is this even from? And why did I put that line there? Because sometimes you'll come back to a chart and you're like, how long ago did I do this?
So I do I haven't done a ton of trading in my life. I've done a little bit of trading, and I'm familiar with the Cosmos blockchain and Osmosis DEX, and they have a perp DEX called Lavana that I have a little bit of liquidity over in my Osmosis account. So I've been playing around with some of these because you actually can draw in. It's actually very similar to what Velar's perp DEX looks like, almost identical. And it's got a trading view overlay. So I've been actually practicing my TA in the Lavana perp DEX.
That's great. And I encourage everyone to do so. And the cool thing is, TradingView, you can get a free account as well. For those that want to get started with charting, you can get a free account. And in my profile link on X, I have this indicator that I've shown off, which is the Landy bands, and it's free. You do have to just add it as a favorite, and it's got a whole bunch of indicators built into it because you can only have a set amount. I think it's limited to like 1 or 2 indicators on a free account there. But this has my Bollinger Bands in it. This also has moving averages that I showed you, I believe, the last time that you could turn on and off. It even has some other things that I don't regularly use, like a super trend down here. And then, of course, it has the volatility metrics as it relates to the bands, that BBWP that we've previously talked about. So I think, this is going to be a good place to start with on this monthly because we have some real clear interest in a specific area for stacks, right? Just by identifying the monthly closing high here with the swing high, we can see that in stacks on the monthly, we put in a nice higher low down here, and then we have a higher high up here. And where do we see the potential area of interest for a higher low to come in? Well, that would be between 93 cents and $1.30 here on the monthly. And we see that Stacks has played around this zone as recently as the July monthly candle into August, and then it actually based off of this area in September of 2024. Now, we did get a nice swing low structure, and you'll see here that we've referenced the RSI before, and we see that there is a closing low structure that's in, but it didn't result in a move all the way back to the highs. It did result in a move higher when we put in the November into December candle. But of course, market conditions in December were pretty volatile and actually down on the monthly for Bitcoin. And of course, altcoins saw December monthlies also head down. So this is not unique to Stacks to see this kind of a move back down towards the support. And how do we know that this is it can be identified as support? Well, because prior it was resistance, then we put in a higher low, and then we put it in a higher high. So we moved through this area. It was no longer resistance. After closing above it, back tested it, put in a higher high, and then came back down and bounced off of this area. Thus, we have a an SR flip. In this case, an RS flip, so a resistance to support, right? And this is the area that everyone that's bullish on this going higher would like to see hold. So $1.30 to 93 cents is kind of the main area. And even within this structure, we'll be able to identify some areas, even on the monthly, where we should exercise caution. And that would be below the $1.30 region, right? Because if we start to see price fall below $1.30, realistically, the swing low structures that are in here are fair game. In particular, this $1.05. The $1.05, 105 is going to be, or $1.05 is going to be the swing low to identify as the kind of really big zone of interest here within this structure. Why? Because we did get a low set, but then we have a nice swing high up here at $3. Okay, $3.01. If we were to see stacks close below this $1.05 region, well, that would be a lower high confirmed. Okay, so we have the higher high up here, and that would be the lower high. Now, that would be on a monthly close. But in the meantime, this entire zone would be the zone in which we would be looking for stacks to play in between the $1.30 to 93 cent zone. But we would not want to see stacks close below the $1.05 region on any kind of a macro time frame like the monthly. And we can now go ahead in here and we can use the horizontal ray tool, and we can make this the red line of doom. And I know that's ominous, but it is just a fact. So
ominous, humorous, I don't know.
Yes. And look, now we have something to we have a reference to the downside. We need to have our reference to the upside for the macro timeframes. And there's going to be, of course, the most obvious is going to be the close open structure here. I'll take the open to the high, which is a pretty thin zone. That is a clear reversal, by the way, when you just get a nice bull candle and then the bear candle comes right down and closes below the low of the bull candle here. In this case, this is what you'll see called a hammer. This was a bull hammer. Many were expecting up in April, but what we got was a down candle that took out the low, thus setting this higher high on a macro time frame and indicating that we were very highly likely going to test this higher high over here and this zone that eventually did get tested months later in August. Well, realistically, first test July into August. So we can identify this area up top. We'll use the horizontal line tool, and we'll take the open, and we'll take the highs here, and you'll see that it's a very thin area of resistance. So when stacks eventually gets back to that level, and if it eventually gets back to that level, which we're going to evaluate further, right? We can identify that this is a pretty thin zone of resistance. So in theory, if price auctions up to this area, it is very highly likely going to maybe get lower term time frame pullbacks, but in the macro scale, probably going to rip right through it. But we do have a close open area of interest that is not a confirmed high on the monthly time frame here, and that is, of course, right here by our upper first standard deviation. Now, we're not talking volatility just yet, but I did want to point out the confluence right away. But the close open on the monthly from November into December is there at 231. So we need to identify that area as an intermediate area, before getting to the highs, right? So this is going to be an area of interest back to the upside, at least on the monthly time frame. So it's a macro level of resistance on the close open. You can even see on the way down when stocks tried to regain this, it did run above this area and got rejected pretty soundly. So we also need to take the high, or the swing high here at 313. So pretty wide area of overhead resistance, right? So we have a thin area at the highs. So we don't have a big area of resistance. It was very strong resistance because it got pretty soundly rejected. But if it were to approach that price level again, very highly likely that it's not going to hold up as resistance again in the longer term time frames, especially if this paints another nice higher low. But before getting there, there's a big area of resistance between the 231 and $3 region. So a 70-cent zone, essentially between our upper first and nearly the upper second here for our volatility levels of interest. So we do have to identify that. And now that we have a good support and resistance zone reference bracketed around our current price action, we can start to move on to where we are finding confluence on our volatility levels of interest for the Bollinger Bands, right? So we went from what is the trend to identifying the support and resistance zones, which are zones of interest. And then now we're moving on to looking at where the volatility levels have confluence with those zones of interest. And you can see that, starting with where price is below the basis band on the monthly right now. And Stack still has, what do we have? We have 17 days and 6 hours to go before closing this monthly candle. The basis band is a 20 simple moving average. And, I haven't done too much talking about moving averages, but a simple moving average is essentially calculating the previous 20 candles and averaging where the average price is. It's a simple moving average. Now, that's a simplification of how moving averages work in terms of, simple moving average and exponentials and like all that stuff. We will eventually get into that kind of stuff. But for right now, just understand that it's looking back 20 candles and giving us the average of where the price is. So it's a lagging indicator, but it is telling us kind of where the trend is going, right? And in this case, it's still pointed to the upside. And we would like to see stacks regain the basis band by the end of this month. And we can get a price point on the indicator that I built here. It's at $1.54. So we want to see Bitcoin stacks. It's definitely a Bitcoin layer 2, that's for sure. But we want to see it get above here and close above here. And that's one area of interest to the upside. To the downside, we still have this $1.30 support, and it is biased right now to that area, although it did test down around all of these all of the swing low structures here. But if it were to continue down, we have to pay very close attention to that $1.30 region. Anywhere below there, and eyes on, because we have to pay very close attention to this swing high, not just being a swing high, but any closes below where it is right now. I'll be honest, it's going to paint a closing high, and this would be a lower high, and more biased to head down. So we do need to be cognizant of this low structure right here, and we probably should mark that. So now we've got our some other areas of interest, and it's right around the basis band or the 20 simple. What's up, Mr. Spread? Big shout out to him. Go follow him, by the way. He's an excellent analyst. So, but from here, stacks is in a dangerous zone, because if it closes a lower high, we have to pay very close attention to, potential further downside, right? And it would also be taking out the higher low that was set on a close. And we would have swing higher low to swing lower high. Therefore, we would be looking for price to fall and get continuation likely. That's just the fact of where things are in terms of price action, right? And that's where we have to pay close attention to the $1.05 region for continuation to the downside below a dollar down to the 93 cents at the macro support area.
Now, it seems to me that it's actually easier to see that on the longer time frame.
Absolutely. Yeah, it clears up the noise. You just move up the time frames, and then we can use this as a reference for other things, right? There's a few things that we haven't looked at. And that is that in this case, we haven't really looked at RSI, but RSI is not going to be the best reference for us because of the history. But we do know that we had a very high RSI read at that high where stacks got to about just shy of $4 there at 384, right? So even if it were to head back up and make, if it made a lower high, right, or it paints this as a lower high, there's no divergences in play, but it wouldn't look good. At minimum, we'd be looking for a longer form consolidation, and we'd have to come back to it, but it'd also be in the start of a bearish structure. The swing low to swing lower high is already bearish, but it just hasn't been confirmed as a lower high on a closing basis. So bulls need to, not to be crude, they need to shit or get off the pot in this sense. So, and now we can get a bias for kind of where things are on some of the longer term timeframes. This is a regular stochastic momentum indicator, as many of you already know. I don't use Stoke RSI if I'm already using an RSI. I don't Stoke RSI. I'm going to say it every time. I say it in all of my videos. It is the velocity of RSI, or the speed at which the rate of change of the RSI itself. We already can see the RSI. So what this is close over close price momentum. And for those asking, there is free indicators. This is a paid indicator because it has other bells and whistles in it. You don't need it. The free indicator is called the BA Pig reverse Stoke. You can just type in reverse Stoke and you can find that. It's a free indicator. It'll give you the momentum pivot. And we can see that it is down. It is in the bearish control zone of a regular stochastic momentum indicator. And in theory, because of the history, as it stands right now, this will turn back up on closes above $1.92, which is within some of the lower term time frame levels of volatility of interest that we're going to look at in just a moment. But now that we have a good understanding of where stacks is, we're not making predictions on where things are going to go. What we're doing is we're identifying the areas of interest and the possibility of a structural change on a close. And that confirmation will come on closes here or lower, is where we would see a lower high set. But that's a big but, and I will not lie. No other brother can deny that if it were to base out here, even if it put in a lower high and a lower low structure on a close, as long as it's above the $5 region, it can save itself and possibly take out a more reasonably attainable lower high and a close eventually, right? So that's where we would get kind of trendless closing structure within a swing low. And this is where things do get a little complex in the longer term timeframes for stacks, if that were to occur. But to the upside, let's go ahead and take a look. Overhead resistance on the monthly is going to be that 231 to that 301, right? Well, in this case, that's also where the upper first standard deviation on the Bollinger Bands is. And that is confluent. So this is pretty strong overhead resistance, not just from a horizontal support and resistance aspect, but also from a volatility aspect. If that area is regained, then you can see that we have the opportunity for stacks to be playing in that zone between the 231 and $3, and even up to the upper second standard deviation. And in the macro time frame, we would want to see stacks take out that 301 and also take out that upper second standard deviation there at 313 in order to initiate some further price targets and potential volatility expansion on a longer term time frame, like this monthly time frame in this case, back to the highs by where we see the upper third standard deviation up there coming in at 392, just above the all-time high zone up here. But this is a massive level of resistance overhead right now. And when I use words like massive, everybody interprets that as, oh, well, that's way more bearish. Well, no, it's just a big level that stacks could be playing in. It's not inherently bearish. I mean, it's bearish because it rejected from there, but upon a retest, you know, what you're looking for are the conditions. Is it going to close above on the daily, above the 231? If it starts getting closes, then we're looking at it being above, you know, that upper first and a macro level of resistance on a close. And then we'd be looking at that zone to at least get filled out. And it doesn't have to be completely filled out, but that would be at least the area of interest overhead. And if it starts to break it, then hey, good on you, bulls. Now we're looking back to the next level, to the upside. So let's go ahead down to the weekly real quick here and take a look at how the weekly pairs up with that macro area to the upside and downside, or those macro areas to the upside and downside in terms of support and resistance. And you'll see that, well, we had, you know, this really nice big expansion, right? From the lows in 2023, I believe it was 2023, right? So back here, and it's 2022 is, sorry, it was the lows in 2022. We saw a nice little double bottom on the weekly. We had this downtrending swing and close structure. Once we broke out above the 38-cent region, we had higher highs. We even had a nice higher high swing to higher low swing. No high set there, but it was a nice swing, higher high to higher low, and then a nice higher high before going in and putting in a higher low, a little bit of a lower high, lower low, creating some, you guessed it, bullish divergence over here in that case. So what we ended up with is, it actually, yeah, did it even call this? It didn't even call this a low on this indicator, but it was a bit of bullish divergence, I believe. No, actually, it avoided it. Wow, I'm actually surprised. But either way, now then we had the area here at 87 cents after putting in this nice higher high structure, higher low, lower high. What did we need to see? Well, we needed to see stacks remain above this low here on a close to prevent further continuation to the downside. And if we were to zoom in here on the weekly, you can see that it didn't close below this low at 44 cents, right? It did swing down below, but it held that area. And then it put in a nice low structure here. We now have, you know, that area back then when I was charting it, it was, you know, based on like, okay, we look left, it's got to get above this high to set the low. It sets the low. Now it had to beat out these highs over here and some of the structure that came before it. And then in particular for this particular trend, we needed to see this high at 87 cents taken out. Once that was, we're going to go back and test the higher high. And then we're looking for higher low structure from there. We got on the weekly a nice high set here to higher low, and then higher high up and away. So what we ended up with was a nice big move up off of the bear market bottom, big expansion up. We got some reversion back to the mean. We were in a compression phase. And if we had seen the area right here where this line was at 44 cents breakdown, we actually would have probably been looking for, because we had confluence at the lower second, expansion down, but we never got that. It held, bounced right back to the top side here for the volatility levels of interest, and then started to kick off expansion into this overhead resistance. It found a little bit of resistance around the close open and the swing high here on the weekly. And then it legged up, found it as support, and then continued its way up in a very, very expansive fashion. And now if we look at where this low came in, it was September of 2023. And in September of 2023, there were not a lot of altcoins that were running the way that stacks began to run with Bitcoin. But if we were to look at, for instance, total 2, just to get a good marker. Do I have total 2 here? Yes, I do. So let's look at total 2. What did we say on stacks there? We said that stacks was, let's go ahead and take a look at stacks again, make sure I got the right date, because it already left my brain. This was September to October of 2023, right? And then if we were to compare that to our total 2 in the same time frame in 23, September to October, we see that in September to October, and even through December here, let's go ahead and get rid of the fib levels. If we were to look here in September for total 2, which it's November 22. Bear with me for just a moment here. August, September, we'll just call it right there. We did eventually into October, we were in that downtrend, and we did see a move up, right? So alts did help recover with Bitcoin. But in many cases, we did not see them recover in the same way that stacks did. They all came off of their lows in a big way. If we were to, for instance, take a look at Ethereum around the same time, we've got, let's use a clean chart. As you can tell, Landy does a little bit of charting here, huh? Let's go ahead and get rid of this. We'll remove drawings on this chart. All right, so September to October, you see the big expansion up, right? But look at where we were in comparison to 2022, right? We had a big move up. Oops, we're going to go ahead and make that our green line here for Ethereum. And then we see that we got that drawdown into October of 23, right? So we have August to October right here in 2023, and then a nice expansive move up. You'll notice that it had other more significant overhead areas of resistance, right, before getting to the all-time high, and it did not make a new all-time high. It fell short, went into a consolidation, and then legged down, and then we got this big consolidation before a nice move up to take out the highs, and then now it's looking for some swing, some bullish swing structure. It's technically a higher low and potential lower high. Hey, what does this remind you of? We have a higher low. We have a swing lower high with the potential, if it closes here or lower, to do what? It's going to now paint a lower high on a close, right? Many people think in the Stacks ecosystem that what is happening to Stacks price action is unique to Stacks. But what Stacks did is it ran much harder to its prior all-time high and higher. And this is where, when it was making new all-time highs, many people were looking for it to keep going. But the rest of the market topped out right here in March, right? So if we go ahead and draw a horizontal here, or a vertical rather, not a horizontal, it topped out in March. It retested in December over here. If we go back to Stacks and take a look, what we have happening on, for instance, the weekly in terms of our expansion areas of interest here, our support and resistance levels and all that good stuff as it relates to the macro, you'll see that it's quite similar to what we're seeing across all of the alts. And we got to go back to this one. We get the nice big expansion up. We did get a new all-time high for Stacks. Of course, that's not charted here. Now, when you look at this particular structure on the weekly, if we were to compare that to what we were just looking at, the only difference between Stacks and Ethereum, for instance, right now, two very different assets and what they do, is that Stacks back here in the December candle, where Ethereum ran its structural highs that it had just put in back here, and guess what? March, same time frame, topped out, right? Just before the Bitcoin halving. But this was making higher high structure. Big rundown, nice move back to an area of interest where it was on the weekly kind of a front run of the high here that was put in a lower high, whereas Ethereum pushed back to its high, right? And now it's back and basing and doing essentially the same thing. But on the weekly, stack structure actually looks a little bit kinder than even Ethereum at the moment. So what does this tell me? This tells me that we have right now on the weekly, we have a nice higher high, whereas Ethereum has the potential to set a lower high, right? So when we're seeing conflicting reads, like on the monthly, it has the potential to set a lower high. When it set a higher high on the weekly, we now have these two time frames that are at odds with each other, which points to a consolidation structure. And one of the reasons that I bring that up is that it's highly likely that even if it were to head down further, that it's going to try to find a base around the high 90-cent region to that $1.30 region. And only if we started to see total market conditions shift to the downside would I be looking at that potentially breaking down further. And in this case, what we need to see is a higher low set. And we're going to reset this chart and we're going to chart it on the weekly, right? We have the macro here. We can, or what we can also do is we can take and we can group this and we can just call it like, we'll take out this line down here. We don't really need it. And we can just group this and we'll call it monthly. So let's go ahead and we'll call this the monthly. We'll call it monthly SR. Okay, we're going to hide this for right now because now what we're interested in is we kind of have a good idea of where things are, right? We're just getting more candles for the weeklies, but we understand the risk of this low right here at the $1.05 region for the weekly. And in fact, there is another low structure right here that Stacks is trying to hold on to as well. We also have a nice high structure that was painted on a close and then a nice low and a close. Nice swing high, swing higher low before putting in that high up there just shy of $4, right? But if we were to gonna just focus in on what we need to see right now for trend, well, if we look left in the local structure that's being built, we have this nice accumulation. We had a compression, right? We had a downtrend on the weekly, and then it started to try to shift. We needed to see higher highs above this guy here that then became this guy here to break the downtrend, right? We did get higher lows in here. So we have successive higher lows. We then got a nice breakout higher high and then right back down to test this higher low structure right here. So the criteria for structure right now in terms of a close is going to be closing above this particular low right here in the more near-term time frames. So that's going to be at about $1.40 for the weekly, right? The risk is that if it closes below here, we're looking down to that $1.05 region, right? That these lows are very likely going to get ran again with the potential for having some macro time frame closures in there that could paint lower highs and confirm them on the macro time frame. So this is going to be our red line at $1.40. We do have a swing lower low as it relates to this higher low over here. So this swing lower low coming in at $1.35 now is below the low here. So we do have swing lower low structure, but we have not closed below there. So this is still the area that we want to see hold up. If we were to see closes below there, then we look directly to this low at $1.35 for continuation to test further structure to the downside. So I want to be very clear. If we see closes below and price has not fallen below this week's low at $1.35, then we would be looking for the $1.35 and lower to get tested. But it's in an area that we have found support in. We've even been front running lately that big macro structure off of that high on the monthly. And what we want to see is a low being set here. Where would that occur? On a close, we would see it, on closes back above, the $1.76 region. It wouldn't actually throw the close because we would need to see a candle close like this and then a nice green candle. Then that would close it about $1.76 or $1.76.5. If it were to happen this week, we would need to see the close come in above $1.87, which would also be back above the 20 simple or the basis band. And then we can start entertaining the top side of this consolidation structure, right? This consolidation structure being around that $1.95 to 207. Right there, we have just above there the upper first standard deviation on the weekly for volatility. And if you look here, when talking about trend and some of the support and resistance, where I'm not quite throwing on all of my different areas of interest for support resistance levels, what we're finding is that we can just kind of eyeball it, right? We've got $1.96 to 207. Break out of that, we're likely testing to the upper first, which is at 217. Above there, we can look left and we have the highs up here. Of course, there is a close open on the weekly here that we need to pay attention to around 226 to the upper second around 250. Get above 250. We're now, especially on a close, if we haven't seen price run to the close open high up here at 271, then we would be looking for that to occur. But this would be expansion into overhead resistance at this high. And we'd be looking at this as a 271 to the high range at around $3.01. Anywhere above there, this hits full on expansion on confirmation because it'd be above the upper second and clearing the overhead resistance at 301. We'd be targeting, shorter term time frames, 338, 350 up to the highs here and potentially marching to the high at 384 up there on expansion for a weekly time frame. That would look really good, especially if it was coming in around a monthly close. Then we'd be looking at that swing lower high being taken out, and then we'd also be looking at a higher low in the macro being set again. And then we kind of move on from there with further upside extension targets off of this structure and the macro structure and where we find confluence with them. And what are the odds of that happening is kind of where we are right now. And the odds of that happening, we can get a feel for on the lower term timeframes relative to the weekly, but we should investigate a little bit more on the weekly here. Whereas RSI, for instance, we don't have stacks threatening to set a low right here just yet. We have to see subsequent weeklies close and where they close to see if there is the potential. So by the end of the week, we know that above $1.87, this is going to be a low set. It would be, a swing higher low on a close, but a swing lower low. It'd be a swing lower low, but a closing higher low if this candle turned green and took out the $1.87. That would look good. Then we would be looking for, top side of this range back to this this higher high structure on the weekly. When looking at RSI, we also need to evaluate where would this throw potential bullish divergence? And as it stands right now, we have uptrending lows here on RSI, and that matches our uptrending closes here. And we don't have any lower low closes just yet. So there wouldn't be any bullish divergence just yet off of this structure. So we don't have any confluence with our structure in terms of throwing any bullish divergence as it stands right now. If we were to look back to this guy here, I believe that we might see a so if we were to set a closing lower low, we don't have much here. I'm searching for something good to say. Well, there might be some longer term time frame areas of hidden bullish divergence off of some of these other lows. If it sets it here, it's not as exciting, right? So like this low over here relative to if it sets a low over here, could there be the potential off of RSI over here? Sure. Yeah. Doesn't do much for me. And then we need to know where the pivot is for something like a Stoke. You can think about it like pressure up, pressure down on the weekly. In this case, above 252, we would see stacks turn the weekly around for momentum. And obviously, we need to see a low set before then, above $1.87, at least from here for right now. If the candle closes anything like this weekly, then, it would be $1.76 to technically set the close, but we would still need to see $1.87 taken out, right? It's got to clear that area to get continuation up. Where is 252? Well, pretty easily identifiable here. That's the upper second standard deviation. So that means that we're clearing this high over here, and the upper second standard deviation, which is at 251. That's where we would see the stochastic momentum indicator turn. So in that case, for this week, that would definitely be a low being set, and that'd be a very powerful move back to the top side, likely targeting that higher high up there and higher, right? But the odds of that happening from the look of price action right now and the distance in which price would have to appreciate to the upside, very unlikely. So it's still pressured down. So now knowing that particular information, we can go ahead and we can start to look at the daily. And we see that the daily had that nice uptrending structure, right? We had the downtrend. We did try to get some trend reversal setups going here during that downtrend back here in July, right? We had this pretty consistent downtrend here. So we had the little bit of a bullish divergence here. We had then the kind of double top on the daily. We had the higher low taken out on a closing basis over here, right? We had the then lower low, lower high, lower low, lower high, lower low, lower high, and we got a little bit of choppiness, but still a pretty consistent downtrend. Tried to break out on the daily, put in a higher high, tried to set this higher low, kind of failed in and around here with swing higher high, swing lower high, swing essentially higher low to lower high, and then right back down. It tried for another trend reversal here where we had a nice higher high structure break. We had some nice higher low, a nice higher high, but failed to get above the swing high there at $1.94. And then we got a lower low. We got about equal highs. We did get a swing high, but that was a rejection because no closes came in above around $2. Once it took out the low, and right back down for continuation. Then sideways and up price action. Then we went a little bit trendless for consolidation, expansion down into some of the supports over here, right? So we got some structure ran over here on the lows that acted as support. We even have, some of the consolidation structure over here that it was sitting on after the expansion down, ran it right back to the top side, chopped around, and then finally went up, just kind of rode its way up to that $3 region, right? And then what did we see? We see that after the nice big move up, after a nice little double bottom here, we ended up with a common area of support. It ran the high up here, sat on it, and then went up, and then took out some of the swing structure, but was still in position for higher lows and possibly moving back to the upside. Put in a nice low here, but immediately swung it right back down into another higher low, got rejected on the bottom side of the candles here. And if you were to look left, where this kind of came in, we have a lot of price traffic in this area, and we can go back to the weekly and we can identify some of the key zones, but we're just looking at the trend. Once this low is taken out at $1.88, we see that we got the lower low structure, tried to set a low, lower high, lower low, and then right back up to retest this breakdown, and then continuation down. But we had a big expansion down, a nice mean reversion that took out this lower high. It did lose it and go back into lower low, but what did we see Bitcoin do at the same exact time? Bitcoin went up. It was in a downtrend on the daily. It broke that downtrend with higher highs up to 102,500, and then went right back in for lower lows. So we're seeing the same thing play out in Stacks, but Stacks is in a weaker position relatively on the weekly, for instance, and it's in a relatively weak position on the monthly time frame. Now, after evaluating all of that, one of the big things that I want to kind of talk about here is that what should we be looking for to get bullish on Stacks price appreciation? Well, instead of starting at the macro and moving our way to the daily, we now go from the daily to the macro, because we have very clear conditions that need to be set. First of all, the daily candles need to set a low. Okay, so the daily candles need to set a low. Sorry, I'm moving my can of coffee over here. Canned coffee, canned cold brew. It's actually pretty good from Costco. Their brand is actually good.
That here, we don't have Costco.
No, well, you're missing out, man.
I know.
We're spoiled over here on the West Coast. We get all the fires. We get all of the bad.
Yeah, well, it's that. We don't have the fires.
But Consolation Prize, canned cold brew from Costco.
The politicians aren't any better over here. We sprang forth Gina Raimondo, if that means anything.
Yeah, yes, it does. Oh man. Now, daily, where would the daily actually set a low? In this case, I would actually, technically, would it set a low above $1.52? Yes, I'd want to see it clear all of this resistance overhead at about $1.56. That would be good enough for Landy. So this is what Landy's going to watch to set a daily low. Now, that's going to be our starting point for this daily, right? That is, we're not looking any further left. We could to find like what zone is it in? Is this an area of interest on a macro time frame and like all that stuff? Let's just define some simple criteria. You set a daily low above $1.56. Now, would that come on any bullish divergence? That's the next thing that we want to look for. So if we look at the daily, we can see that we're in lower low structure, and there's the potential for us to get some nice continuing higher low structure on RSI. So yes, in fact, we would see a drive of regular bullish divergence, and we've already previously seen some. We would also see Stacks close back above the bearish control zone of RSI as well. So that would be a good thing. So this would be encouraging for price to appreciate to the upside. And we can also take a look at, and you notice I'm not talking about the bands or volatility yet. I'm going a little out of order. Shoot me or sue me or both. You can shoot me and then sue me, but I'm going to counter sue and win. Either way, point being that we're going to take a look at the volatility levels of interest last here, because I'm looking for where is the potential here for a long position, for, if you're been accumulating for a longer term, it's very close to a macro support level. And even though the macro outlook is not as rosy right now, it's like teetering on the edge of being something that is going to turn into potentially a good look. And it all starts with this daily. Closes above $1.56, we'll do it. Today, tomorrow, as long as it's holding what? Well, the continuation area. If we were to look at also where it needs to shift momentum for like a stochastic momentum indicator, $1.44 would do it. It's currently at $1.48. So even without setting a low, we have some confluence down here that there is a probability here that it will shift momentum on the daily here if it closes here or higher today. So basically above $1.44. So then the next thing we need to look for is, even if it doesn't set a low today, is the potential for maybe tomorrow's candle or the next day's candle, as long as it's holding this low side swing, to set a low here above $1.56 or whatever that number is. We'll take the top side. Yeah, it's $1.56. So there is some signs here that things could potentially set a low, and we're seeing it right now. And now we need to pay attention to, where is the low? What's the criteria for continuation? What does it need to hold to set this area as a low? Well, it needs to hold the Monday low. The Monday low is at $1.35. So this is now our red line. And this is just taking our current trending structure and comparing it and finding the confluence for that with RSI and our stochastic momentum indicator. So we know the trend is down, and we are just looking for a low to be set. It changes nothing, by the way, in terms of the trend if a low is set. Why? Because we now need to see
A higher high.
We need to see a close above. For right now, this may change, right? We need to see a close above that $1.87. But there could be a few scenarios that play out here. We have some volatility levels of interest that need to be regained. If we see the lower second close below, that's at right around $1.39. We're either seeing price already running this $1.35 low, or it's going to, and very likely, expand to it and possibly through it, right? Because the conditions would be below the lower second, getting that expansion to the downside, and then also breaking that low for continuation, right? And then we'd be looking at lower prices. Now, back to the upside. This is, a bearish look at the moment, but back to the upside, if we see the lower first closed above, which is at $1.50, basically, it's $1.49. It's $1.4925, so $1.4925. Back above there, again, we're looking for price to potentially head towards the basis band in terms of volatility, which is, by the way, in the next close, likely going to be around this $1.56, where we want to see a low set. From there, we can look to the upper first standard deviation, and that is going to be coming in at $1.70. And $1.70 doesn't do much, even if it regains the upper first, because if you look at structure from this most recent downtrend, which is the most important one, yes, there is the longer term stuff, but it's the most important one for us in this particular local structure. We need to see it get above there and start to test up into the upper second standard deviation. With the bands positioned the way they are, I will tell you right now, the upper second is right around this high, which was a lower high. Very highly likely going to be rejected. Well, what does that mean? Well, that means that it's very highly likely that even if it got back to this high, it's not going to close above it on the first pass. Doesn't mean it's out of the question, but that would be full on it. That would be breaking this high and then getting expansion to this high. Even if it makes a higher high, we would need to look for higher low structure from there. And we can kind of play this out. So I'm using the on the trading view chart, we're using the path tool. And if we were going to say like, okay, let's say it sets the low, we need to see it take out this higher high from here, right? Then we need to see, you know, higher low structure and then higher high structure from there, right? And that's what we would need to see right from here, right now. That would be the ideal setup, right? But in terms of what we're seeing on the charts, in terms of volatility levels of interest, in terms of this lower high over here being confluent with the upper second, it's more unlikely than likely. So what's more likely is something along the lines of a structure that kind of comes up. We'll do it off to the side here, that comes up like this and puts in a lower high and then a higher low, and then takes out that lower high to then head up to this higher high, because now you're in a structural trend reversal. Because if we have a lower high, let's say, that comes in, just for S and G's, shits and giggles, for those that don't know what that means, let's say it tops out indicator. Yeah, it might be. If you turn on your shits and giggles indicator, then you'll get a pattern like this. And that's where we could take a look at a lower high, potential higher low, as long as it comes in above this low, right? If this low is set here, then we look for higher low. We look for this to be kind of the zone of interest here, right? We'll just call it this here. Now this would be our overhead area of interest, and we can draw a box around this, and we can say, all right, we would be in a trend reversal setup, and the criteria would be break above that $1.87, and then we're looking for higher prices, likely to go and test like this low over here. There's kind of a zone over here, yada, yada, yada. But you can see how what we're looking for is the potential low to potential scenarios that could play out after a low is set. And that's where we could potentially see a trend reversal setup, that then we'd be looking for trend continuation. Because if it got above the overhead resistance locally, then we can start looking at, the rest of this coming up, and then, higher low, higher high, as things get more volatile, moves get bigger, so on and so forth. So then we could get into a structural uptrend. Then we could potentially see this follow through to the weekly, and then we could potentially see that follow through to the monthly, thus saving everyone's bags. And as it stands right now, in my current estimation, I think that Stacks is in a safe position in the area that it's in, even if it did confirm a lower high on the monthly, to be quite honest. It's a big level of support to the downside. The network is just starting to ramp up in terms of their SBTC adoption. And I am not looking at this cycle for Bitcoin being over yet. Let's put it that way. We're in higher high, higher low structure for Bitcoin on macro timeframes like the monthly. So for those that were looking for like some significantly lower prices, particularly for those that were looking for 40K, I'm going to just tell you it's very unlikely. It's just not. I did a video yesterday where I addressed this, and
I heard you talking about it either in the video or I saw you in a space talking about it. It's just goofy, like that.
Yeah, it doesn't make sense.
Can it happen? Of course, if
anything can happen.
Right.
I can grow wings and fly, and I believe that, and if I believe it hard enough, then I should probably put it to the test, right? So here's my challenge to anybody that believes something hard enough like that. If you are really convicted, like if I believe that I'm going to grow wings and fly, then I should go up to my roof and test that theory, right? And for anyone in crypto, and specifically,
that's a tall roof on the Silver Spoons mansion.
Yeah, it is, isn't it? Well, if I believe that in crypto, then I should be shorting the ever loving shit out of Bitcoin right now, right? Because if I think that 40K is incoming, I should be full on short right now, because that would actually break structure on the monthly, because the last higher low on Bitcoin is $49,000.
Well, if you actually had conviction on that and you were right, you'd make a killing.
Oh yeah. Yeah. Well, guess what? Guess what I don't have?
Not right.
That's conviction on that. So, look, there's a lot of interesting conversations that occur in various ecosystems. I'm going to give you all an example. So Stacks ran harder than everything else, and it ran harder to its prior all-time high and beat it. We also had other things that ran with Bitcoin prior to the halving. There weren't many coins that made new all-time highs prior to the halving, but I'm going to show you one other one that just kept ripping with Bitcoin the entire time that a lot of people were excited about, and now are like, oh, it's dead, nothing's going on there, and they're not paying attention to what's going on in the network, and that's Caspa. And I like to draw this correlation because it is something that I think is important to understand. When things move early and run way harder than everything else, they typically will have a longer drawdown and not recover as well back to the upside. They've kind of seen their move early, and then they're likely to see their move when everything else is headed down and trying to make new highs. They'll see their move later. That's just kind of how things go in cycles. But and in this case, we have Caspa. This is the weekly look on Caspa here. So if you look at this chart, this is a very, very bullish chart. So from June of 2022, let's reference actually. So June of 2022, what was Bitcoin doing? So let's go ahead and add Bitcoin. So what was Bitcoin doing here? It was not a line on the chart down here. What the hell did I just do? I think I goofed that up when adding to the chart here. So let's go ahead and do new price scale. There we go. Thank you. All right. So this is the weekly Bitcoin as it compares to Caspa here. So if we were just to throw on, we'll get rid of the Bollinger Bands. We'll get rid of candles, and we'll go with a line chart here. And if we were to kind of match up timeframes here, do you see what I see? We see that while Bitcoin, was coming off of its low, even putting in its lower low on a close down here, Caspa was in higher low structure the entire time, had a little bit of a downtrend here, and then legged up while Bitcoin was consolidating over the spring and summer of 2023. And then it just continued when it was actually continuing when Bitcoin was going through all the way to September and October of 2023 before it broke out into 2024, when we had in January the ETFs, right? Well, Caspa was just up and away, higher low structure, very volatile here on the weekly. And then you notice that once it put in these highs here on the weekly, we had this nice uptrending structure because these are closes. We had nice closing higher highs up here. And then we went into a little bit of a downtrend on the weekly, and then we broke down and then ran it right back to the top side, topped out, broke down. And what do you see on a closing side here for Caspa? Higher lows. Well, it's funny because everything else was catching up when Caspa was heading down, right? Because it was an early mover with Bitcoin. When Bitcoin was consolidating even over the spring and summer of 2024, Caspa was up. And when Bitcoin broke out to new highs, Caspa went down. Oh no! Caspa went down. Holy shit. It was an early mover. It was highly volatile, and it dumped out while Bitcoin went up. And my bags are down. It's over. Caspa's dead. Bitcoin broke out and it's on a run. Why isn't Caspa on a run anymore? Because it was very highly volatile with Bitcoin, and during Bitcoin's consolidation structures, it was in higher high structure the entire time. And I want to now bring this right back to Stacks. We're going to go right back to Stacks, and we're going to take a look at Stacks in much the same way. So let's go back to our Crypto.com chart here, and we've got Bitcoin here, and we can get rid of some of the charted stuff here. So we're going to remove all the drawings. Who cares about them right now? What do you see with Stacks? Stacks moved up and basically played very nicely with Bitcoin the entire time through 2023. It was with Bitcoin and mirrored it pretty well. Broke out with Bitcoin, made a nice brand new high up there. Nice high, nice big rip to the upside. Difference with Caspa is it stayed on its highs and continued its higher high structure. And then we have Stacks went into a consolidation while Bitcoin was consolidating. And then, oh shit, Bitcoin took off. Stacks tried lower and did a higher high, but it didn't keep up. Unlike Caspa, which went straight down, by the way, and didn't even get a nice bump up until a little bit later, right? It was a little latent in terms of its move back. But the point being that when you have things that move very early with Bitcoin, all of the other alts were playing catch up, right? Stacks made new highs. There was a very select few other coins that were running as hard with Bitcoin and just absolutely melting faces versus their Bitcoin pairs. And then Stacks took a big drawdown. Caspa took a big drawdown. Caspa's trying to recover. Stacks is trying to recover. Many of the other coins that moved early with Bitcoin and had outsized returns versus their Bitcoin pairs at the time are still in this same structure. Is Stacks in a little bit more danger than something like Caspa right now? Yes, but we just looked at the potential for a low being set and the potential scenarios for Stacks to turn it around on the daily and for then that to start building on other time frames. Just like Caspa is. There's a few others that are painting the same exact pattern. And in fact, here's another thing. Let's go ahead and take a look at Ethereum, Bitcoin's favorite testnet. And yes, I hold a lot of ETH, but it's neither here nor there. For those that are wondering, I'm not just fudding. We have Ethereum versus Bitcoin. Had a nice move up with Bitcoin, right? It even went back and closed above its highs up here, painted higher lows, but look at it lurching over in potential lower low closing structure right now. But is the potential there for it to turn itself around here? It actually did close the lower low last week into this week, but it's neither here nor there. This is actually a pretty bullish structure for Ethereum, in my personal opinion. But it's all dependent on what Bitcoin does from here. If Bitcoin holds the range, we likely see things chop around and try to hold their lows, set some lows, and continue back to the upside. But it's all dependent on Bitcoin at this very moment. If Bitcoin continues to run, things that were consolidating for a while will start to run. For something like Stacks, which I'm going to jump right back to it, here's the potential on the weekly, right? And it's going to take a little while to play out if this does occur. But the potential on the weekly, when we throw on our Landy bands here, is that it stays in this range by the lower first standard deviation at $1.50. If it breaks down, it's probably running these lows down to that low there at $1.15. Then it's in danger of, it's inside of that support at $1.30, right? It's kind of dangerous, but it could turn itself around there. As long as it doesn't take out the $1.07 region on a closing basis, right? So that's from our monthly that we were talking about earlier, and we can turn that on with the line chart here. It's just a little bit more visually appealing, but for the macro time frames, right? We have the let's go ahead and throw on our candles again, and we have this $1.07 region down here. Remember, that's our red line, and we're looking for that to hold, even if we get a close that confirms this lower high. Now, when looking at it on the weekly, you can see that Stacks even would need to close below the lower second on expansion into that $7 region to really start getting things rolling down to the 93-cent level that we talked about earlier. That would not be good for Stacks, but this is a range look right now. And if Stacks heads back to the basis band, we're likely going to see that it can play in this range for a longer period of time to the upside if it can get above it. That's where we can start looking at re-expansion above that upper second that takes out the top side. So that's pretty much what the potential is for Stacks. I really wanted to do this mainly so people kind of understand that some of these early movers with Bitcoin have gone into a compression. We went in for an expansion to the top side here, and then we mean reverted right to an area that we want to see Stacks hold. This is not unexpected. We expanded the range for volatility and ran right back to the lower first. Would have liked to see it hold up at the basis, but that's also the area where we could potentially see a low set, right? And again, same area, that $1.87. That's where things get interesting back to the upside. And from the weekly standpoint, we're looking for this high up here to be the next logical area of interest. And if it starts to close above the upper second by 250, we're looking for this to get expansion back to the high, potentially then back to the all-time high and higher. And I'm going to leave you with this. This is the last thing. We've only just started to paint Bollinger Bands. And it doesn't really matter what the Bollinger Bands were back here. It's that we were in a compression on a macro time frame, like a monthly. We got a nice straight shot back to the upside, mean revert back to the basis band here. What we're looking for is for this to head back up and then try to get back to its highs and higher and potentially kick off some bigger expansion. How likely is that to occur? From right here, right now, we're looking at everything in compression. We're moving into a 2-week compression, and quite frankly, it needs to get back above. It needs to get back above $1.91, and I would say fairly quickly. But support looks like we're going into a compression. It can knock around, stay stable in this range, but then possibly re-expand back to the upside. That's what bulls are looking for. Bears want to see the entire market nuke. Of course, they want their 40K Bitcoin.
So you're saying there's a chance?
I'm saying there's definitely a chance.
This could go. Really, this could go either way right now. It's not. It's hard to tell. It's not telling us it's going to do one or the other.
No, it's more macro bullish still. Although the potential for things to flip bearish are there, especially with the swing lower high overhead. But realistically, this comes back to why I'm always talking about Bitcoin on my public timeline, right? And not talking about altcoins, because Bitcoin is going to decide this for the market.
Right.
And
if Bitcoin collapses, Stacks isn't going to run.
Yeah, it's probably going to follow Bitcoin.
Right.
As will most alts. If
right.
Bitcoin consolidates and sticks on the high side of its consolidation, more towards, above 96 and headed towards that 100K area and above, and knocks around up there, but still continues to consolidate without, breaking out to new highs, then we likely see, alt season begin to really start to develop in earnest. And that's where alts can start to catch up. And that's where you do need to pay attention to what's happening with Stacks in terms of structure. One of the things that I will tell you is there is the potential for Stacks to have already seen its high from the look on volatility on the longer term timeframes. But that is not a foregone conclusion. The only way that I would entertain that is if we have, in my opinion, what would be a truncated cycle for Bitcoin. That's where we get a first to second quarter massive drawdown and potential structural changes. Otherwise, we're looking more towards the end of the year, possibly even into 2026, depending on how things play out. And that would give stacks a lot of runway to build out structure in a compression and then re-expand and absolutely melt faces.
So what do you think the macro situation looks like as far overall economically? And how does that look to play on this?
Well, the economy is garbage. The numbers they put out are more true to what's happening, but with the incoming administration, there's a few things that I'm watching for in terms of potentials to play out. The reason why I keep talking about the first to second quarter transition is we need to see policy implemented, and we don't know any of that. That's all the unknowns, right? And that's why we're seeing some of these moves in the market that we're seeing. If Bitcoin is added as a strategic treasury reserve asset, Doge begins to, just absolutely take an axe to a lot of government positions. We'll see unemployment rise, which is going to cause the Fed to want to drop rates, right? That's going to be where they go. At the same time, if we see energy costs being lowered by executive order and many of the other things that Trump would like to do, we'll get more improvement in the economy. Plus, the Fed is going to want to bolster things because of those. The U.S. government is the biggest employer, outside of the Chinese government, biggest employer in the world, right? And you take a big old axe to that, unemployment goes up, and now we need private sector to take those jobs, to pick that up, which is going to require stimulus. At the same time, the energy costs come down and possibly easing of taxes on people. In terms of policy, I see a tinderbox for things to actually go rip into the upside markets, and the real economy to get better. But that transition period is always fraught with volatility, right? So we need to be very, very aware of that. And that's what the market is trying to price in and position for right now. Overall, I think it's going to turn out fine. But again, that's an I think. The charts are telling me that everybody is a little tentative right now. But macro structure on Bitcoin's fine. Macro structure on many alts is not. They look like they want, in any kind of a downside environment, long form consolidation. Or Bitcoin hangs on its highs and everything goes absolutely bonkers in alt season. Kicks off in earnest. We could
potentially see a situation where Bitcoin kind of goes sideways and everything else consolidates lower.
No, if Bitcoin goes sideways here and higher, I think we start to see alt season really develop in a big way. If Bitcoin does head down lower, it's not at risk in its macro structure, in my opinion, until we see the next big upside move. And then we evaluate if it's a lower high or a higher high, and where's the higher low, right? We don't know that yet. The last higher low in the monthly is at $49,000. I'm not looking at that as being actionable to be taken out to the downside anytime soon. And I have many reasons for that, but that's all in my videos on my timeline. The bigger thing is that if Bitcoin initiates a large move down, it will take alts with it, and they're likely going to go in a long form consolidation rather than an alt season. And that would be off cycle. That would be off the liquidity cycle, because typically around the first to second quarter is when we see alt season kick off historically, since there's been altcoins. And that's still the setup right now. That's still the actual setup, but that requires Bitcoin to maintain its range and then play in the stronger half of the range, in my personal opinion. And we see that it's trying to do that today. I mean, what's it trading at right now? And then I know we got to wrap this up because you have some things to do.
Bitcoin's at pushing 97. It's 96.9 right now on CoinMarketCap.
Oh, it's yep. Yeah, just shy of that on spot. So it's running around 96. Yeah, 96,950, almost 97,000. So this is positive for alts. And if it begins to play up higher, that's even better. If If it starts to go into a nice little uptrend and chop around, and by the way, Bitcoin's almost ready to turn its stochastic momentum indicator while setting a low. Is there bullish divergence off of this low? Yes, there's a slight bit of bullish divergence. This was a slightly lower low close than this low over here. So it's not going to populate on most indicators, but it's basically equal lows, right, on a close. That's what we were looking for. Lower low swing, but equal lows on a close. That's one of the criteria that I've been talking about. And then we also have we have a momentum divergence. You can play momentum divergences on a regular stochastic like this. We're already seeing the low being set, likely going to turn up. And there's a divergence between these two momentum reads because it is reading just close over close price momentum in this case. So we have some confluences for what we're seeing for Bitcoin to play higher, but the same deal. It has to take out its deviation high. So it broke the downtrend and put in the deviation high. From here, it either has to put in a lower high, higher low that takes out that lower high, or from here, it's got to go up and take out 102,735 on a close to break this back to the upside and then put in higher lows. So the same deal like for stacks that I pointed out, where it's got to go and take out the higher high from here, but it's more likely that it's going to have to put in a lower high and then try to higher low from there. It's the same thing on Bitcoin. So we're seeing it across the board. It's got to come up right now and do one of these if it's going to do anything like that. The likelihood of that will be either confirmed or not here shortly, right? But more likely, we're looking for at least swing lower high structure, higher low, take that out, come and test this, and then we look for that continuation later, right?
Yeah, sorry, I'm just getting
Oh, you're good.
my daughter's I
Pick
gotta
me up, damn it. Yeah,
well,
I know
she's
you
not
gotta go.
ready yet, but she's like,
That's
can she has a friend that's a boy that she wants me to drive him home.
And
And I have to message his mom that I'm driving him home. So
okay. Interesting. Dad stuff. That's the dad stuff that I don't have to deal with because I don't have girls.
Oh man, it's the worst. I'll say though, I do love my son-in-law like a son. My oldest married a few years ago, and I've known him since we were in high school. And he coached football with me, and he's just a year older than my neck. So he's kind of like one of the brothers now. And so I mean, there's good. You'll take the good with the bad, right? But it's dadding ain't easy when you got girls, man. And I got 3 of them, including a stepdaughter, which is worse because she looks like a teenage version of my wife, or did. And, she was really not receptive to me telling her anything. So that was a real hard one. Not that any girls are, but when you're not really her dad.
It's tough. That's a tough position to be in. I have step parents as well, and I gave them hell. So I know how that goes from personal experience of the person who was giving them hell. But things are more encouraging today than they were, of course, yesterday in the markets. So for those of you out there listening, it's a range right now, and until that range breaks, we're looking for this to continue playing out, right? That's kind of where we're at with it.
Yeah, great stuff, man. I really appreciate you do it as well as anybody I've seen. It's definitely a tremendous value having you on our network and just all the stuff you're doing on X and all the education and information you're passing around the ecosystem, man. It's really great stuff. And we're super we're very lucky to have you with us.
Well, I'll be here and I don't plan on going anywhere. So for those that are in the audience that want to continue to learn more, or maybe just came in and are like, I don't understand anything he's talking about, you can go back on YouTube and you can find the playlist. The first 4 episodes of this live stream series were me explaining trend, support, and resistance, volatility, and momentum as the 4 keys that I kept referencing today. So I encourage you to go look at that, give those a watch. It's 4 to 6 hours of your time well spent if you're trying to understand this stuff. So and then we're going to keep going with it and keep revisiting these concepts over and over again. And I'm pretty sure we'll be here next week, right?
Yeah, definitely. As long as you're in it, I'm down. I definitely want to keep doing these. I definitely needed that break off. We took a week off and then we missed last week too. So I'm happy to get back in the swing of things on this. I think it's valuable content for our viewers, and it differentiates a little bit from some of the other stuff we're bringing. So happy to have you as long as you're happy to keep doing it.
Absolutely. Not going anywhere, and I'm looking forward to continuing this conversation. I encourage you in the audience to ask questions. If you have any, you can DM me those questions. If I don't get back to you, I'm sorry. I get a lot of DMs, but I will definitely look at it and try to integrate it into our talking points for the show.
If Landy doesn't get back to you, DM me, and then I'll DM him, and we can be ignored by Landy together.
That's really accurate, actually. But yeah, no. And honestly, just reach out. That's the big thing. Even commenting under the live streams and stuff like that, I take a look at those and try to integrate that into the next time that we meet here. And Peace, I want to thank you. It's always a pleasure. And, I'm looking forward to the rest of this week. I will definitely be seeing you in Spaces events as we make our way around. I might even try to pop into one of your shows and kind of raid one of your shows here. So I might.
At any time. I thought you were a great addition to the show this morning with Dave. I thought that added some extra banter there. And what was that? That was the AI show. We had Dave show. We had Dave on twice today. So
shit. Dave's been running his mouth all day. He's not going to stop. He's got ATC in a little bit.
Yeah, he's going to be tired.
I love it. Dave provides a lot of insight. Super smart and involved.
And I learned a lot today about. I didn't know all of the stuff he was involved in to the extent that he is. So happy
he doesn't stop.
Again, yeah. I mean, that's
like you don't stop. He doesn't stop.
Well, he's always got something going on,
Yeah.
So I mean, he was. I'm glad we had him on. I'm looking forward to doing more with him. I think he's a huge value add to our space as well. But you being in the chat and just saying hi is always appreciated and welcome. And I know the morning show is not really your best time of day. But
no, it's not.
Whenever we have anything going on, we're always happy to have Landy show up or say hi or whatever. You're always welcome in my spaces, sir.
I appreciate it, my friend.
Right on. Thank you, Landy. You have a great day, man. We'll talk to you soon. I love you. I love what you're doing, and I appreciate you. We are DeOrganized Media, coming at you live on Bitcoin Live Decentralized Broadcasting, bringing you all the content we can that we think may add value to your day. Thank you for tuning in. Y'all have a blessed rest of your day. Peace out.